We like to put our money where our mouth is. So when we started the Hot Stoxx show in this format back in November last year, we funded a real world account with 100,000 Rand. We do the trades that come out of the individual shows, and we then log and see how the whole thing works, and this is how you get it. So this week's trades, Mark, I mentioned them earlier. We entered a ShopRite position, which is doing all right, made us 462 Rand. Billiton is the one that we should have had, but we didn't. So we went into the market and added it, which was fine, also moved modestly into the green. And then First Rand hasn't done much. That's the Redefine position that we exited. Made a nice gain there, but as I said before, it was more as a result of sectoral trends rather than any brilliance with regard to that particular position. Moving on now to the overall position. This is not every single position because it takes too much space. It's just the best and the worst positions. And there we are. We're back now at 122,727. So we've regained ground. That's why I'm wearing the green tie this week, because the portfolio has gone in an upwards direction. Not too much to report, except that we continue to make good gains out of the likes of Aspen and Famous Brands. On the downside, our worst position isn't showing a particularly significant loss there. That's our Steinhoff International one. I guess that's because Europe is still perceived as being a bit floppy. I want to just throw you a nice softball. A couple of the positions that we had stop losses on are the ones that we would have lost the most money, and I'm going to put out one in particular. One of my favorite stocks to hate is British American Tobacco. We had a short position there. We set a stop loss at a modest like 480. It's now trading at 510 or something because it had good results. I mean, you made the point at the time, stop losses in this kind of trading, very important. So there you go. Don't you want to just remind me and the visitors and the viewers again about how that all works?
Yeah, look, I mean, if usually you try to set stop losses in some kind of relation to where you think the price performance can go. Stocks like BTI, love it or hate it, it's almost like one of the kind of marmites of stocks as such in a way. It is a steady kind of yielder. If you are going to take a position in a stock that has got a pretty consistent trend and you're trying to call a downtrend, it's probably more prudent to set the stop closer to the price where you transact rather than further away. Simply because you're going on a more instinctual kind of a level rather than a level which may be grounded in the price action.
Yeah.
So as a kind of rule of thumb, you can apply that on the long side, the buy side, and the short side.
Okay, so I like that. So what you're saying is if you're going short because you've got some bee in your bonnet about a stock that's been going up for 5 years, don't get over ambitious about the idea that you are Einstein and that you've called the top of this thing. So put it on in such a way that you may be right, but if you're wrong, which to be honest is more likely, you're not going to get carried out feet first and your losses are going to be modest.
Yeah, I mean, you're not going to let, the idea is not to let the losses run under any situation.
And then perhaps if you see a generalized downturn and you're hearing everybody supporting your view, then maybe be a little bit more ambitious with both the scale and the stops that you put on.
Correct.
Yeah.